Like you can go and create a better curb appeal, you can renovate the property, make it look right. But if the people in the community is not on the same page and I have the mindset of making sure they take the garbage to the dumpster and not sit it out in front of the door so the cats can come rip it up, or not
Yeah.
throwing garbage out when they get out of their car. There's a garbage can right there. So creating that shift in that mindset. So offering things at properties, right?
Hey, everybody, welcome back to another episode of the Richer Geek Podcast. Today we have Fuquan Bilal. He's a trailblazing entrepreneur, 25 years of real estate experience, specializing in building wealth through innovative investments in Class B multifamily properties and luxury single family assets. He's the CEO and founder of NNG Capital Fund. Fuquan's redefined how investors approach real estate by focusing on creative strategies, value added projects, and community-driven impact. How you doing, Fuquan?
Doing great. Thanks for having me on the show. I really appreciate it.
Absolutely. So, I'd love to start the podcast out. Give us a little bit about your background, how you started uh, in these different funds and real estate, and what piqued your interest about it.
Yeah, I always say I jumped out the window and grew wings falling down. Kind of learned that way. I actually had the opportunity to get started in '99 and started my journey there when local to me where I was, it was a lot of dilapidated properties. It gave me a feeling of importance going back to those communities, adding value, revitalizing the properties, putting them back on a tax roll was a really good feeling. And that's kind of where I started,
Yeah.
investing at rebuilding the community. And, fast forward, we had the global financial crisis that happened in '08. If anyone was around then knew, real estate market just turned upside down. So going through that challenge and rebuilding, um, you know, I was always say I'm market cycle tested. I have the battle scars from the
That's right.
GFC.
Yeah.
Those were rough times. So it's hard like when real estate becomes your identity,
Hmm.
right? So that kind of taught me how to separate that identity because really wasn't nothing happening in real estate. So I had
Yeah.
to quickly become someone else um, in order to grow. But I'm grateful for that moment because it taught me a lot, right? It taught me really the importance of cash flow,
Hmm.
the importance of having assets leveraged properly, and make sure that you're set up for whatever is to come. You can never be perfect, but you can learn how to mitigate risk. And one of the things for me was building cash flow and also things where I can make some equity as well to increase the process of getting to the goal faster. And that's pretty much what we do for our investors. We give them the opportunity to partner with us, take down assets and create impacts in areas like we spoke about earlier in Middle Georgia, doing the same thing that I started off with when I got started here in New Jersey.
Yeah. So, let me ask you, I've talked to a lot of people that have gone back to their neighborhood or back to, the area that they grew up to help revitalize. Um, Sometimes it's worked, sometimes it hasn't, because what they realized, and I don't know if you can tell the story about this, is sometimes the area is not ready to be revitalized.
Mindset, mentally wise,
The
mindset
mindset,
wise. Yeah,
the
yeah.
mindset wise. So you go, they went out and fixed these things up and they just tore them down again. They didn't appreciate what you're trying to do.
Mhm.
Can you speak on that a little bit and just kind of like, oh, maybe is the neighborhood or is this area ready for me to invest
Yeah,
capital?
that's a good point, right? So our mantra is complex to community, right? Complex to community. What does that mean? Like you can go and create a better curb appeal, you can renovate the property, make it look right. But if the people in the community is not on the same page and I have the mindset of making sure they take the garbage to the dumpster and not sit it out in front of the door so the cats can come rip it up, or not
Yeah.
throwing garbage out when they get out of their car. There's a garbage can right there. So creating that shift in that mindset. So offering things at properties, right? You can do things as far as having nonprofit organizations come in and teach people how to get resumes, how to apply for jobs, helping tutors with the kids' homework, Saturday Zumba classes, a variety of things you can do. Community events, to try to build that sense of community and appreciation. So that's kind of when you change the outside and the inside.
Mhm.
And that's how you create an impact overall, right? So
Yeah. Yeah.
um, purposeful capitalism, if you will. Um, so that's pretty much how we address that is coming from that, you understand it and you know how to work with, the community in that way.
Yeah. Yeah, it's good, and thank you for doing that. A lot of people, they'll leave the neighborhood or leave the state, and I have to always remember I'm small town Indiana, and sometimes I have to remember it's like remember where you're from, remember and stay humble, and don't forget about your hometown. And so, the communities always appreciate those that give back, and don't forget it. What did the hard times, 2007, 2008, or COVID, what did that teach you? I know that I bought a hotel in November 2019, and you know what happened 3, 4 months after that? The world crashed, and it made me so much a better general partner or hotelier. What did you learn during those crises that allow you to be a better person and a better general partner today?
Your network, right? Even though, the world kind of slowed down, you still had your network that you can tap into via Zoom and have weekly sessions and be accountable for certain things, working with your mentors,
Mhm.
with your CFO constantly trying to figure out, how can you project shaving a budget to kind of get a longer run rate. So all the things learned from there, right? How to do uh, risk adjusted due diligence, um, building longer times to sell.
Yeah.
If that's from COVID or whatever. Yeah, you had to get like build processes or rebuild some of the SOPs you already had in place
Hmm.
because everything shifted. And then continuing on that same path when things came back to, I guess, normal, right? Continuing to look at it the same view, right? Making sure
Hmm.
you have a longer run rate, making sure you're constantly looking at those numbers you wasn't paying attention to before. Now it's top line. So, a lot
Yeah.
of things you learn from that, right? So,
It is, and it's not ending, because not the economy is. It's like, we really haven't had. We had maybe a break in 23, 2022, 2023, maybe, and then economy, interest rates, everything. It's like, oh, here we go again. It's just always learning. Um, for the younger general partners out there that are maybe thinking about doing what you're doing, they see you as a mentor. What are some of the things that you could say? These are the things you need to, number one, maybe take care of your investors, you know, communication. What are some of the things you can tell the people starting out?
definitely what you said, communicate, 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 right?
Hmm.
You put together whatever marketing to communicate to your investors to get them to know, like, and trust you,
Hmm.
to make them aware of what you have to offer. When they partner with you, you want to keep that same constant communication, whether it's educating them on what's happening, how you're underwriting, how you're looking at certain things, whether it's education on how to access their portal to get their documents,
Yep.
whether it's quarterly check-ins, whatever it is, you got to continue to provide that same service. And that's where a lot of people fall off at. They
Yeah.
put a good service on to get them in the door, but they don't continue, once the person, comes on. So creating a relationship that's not transactional, focusing on
Hmm.
building long-term relationships through communicating constantly, whether it's good, bad, or ugly. That's really, the main thing that I would say to take away from that, because the easy part is connecting with an SEC attorney, giving them your business plan, creating your operating agreement, putting all that together, setting up the entity to be able to do it. And then the other part is, um, you know, creating those relationships. So,
Yeah, that is the hardest part. During COVID, we went from quarterly to monthly
mhm,
conversations, and then when it was bad to weekly. It's like, here's the same thing. It's 8% occupied. Here's the same thing. It's trying to survive. And So how about, I've talked to some people and then we'll get into what you're doing now. Should I just start a fund or a syndication? I don't, I'm just getting started. Should I do JVs? How did you get your first deals and then work your way up to, ladies and gentlemen, Fuquan's now raised over $50 million in real estate capital. So that's a big deal. What was your first deals like, and how did you do it, and then how did you grow?
Yeah, you would think that's a big deal. $50 million is a great achievement, by the way.
It is.
There are some people, like I was saying again about your network,
Yep.
that I've known, been in a Wall Street network, and then they go open up shop on their own and they raise 300 million
Mm-hmm.
2 years, right?
Yep.
So, that's where your network come into play. So, understanding your network, number one, I would say, to kind of figure out what do you think you can raise from friends and family,
Mm-hmm.
and can you build it out to from your current network? Um, you know, can you, if you raise that amount of capital, execute on it and do what you need to do, right? So it's having the cash to buy it, the asset to buy, and do you have the scalability to kind of manage the back end process, the reporting, communication to investors, continue acquisitions, whatever your responsibilities are, right? Or if you have a team or whatever, making sure all of that's in place, so you can execute on your plan. Because once the interests start to accrue, you want to make sure you meet those timelines and
Yeah.
you know
Yeah.
keep everything
It's
going.
important. It's important, and identifying whether or not people want cash flow or they just want to park their money, and it's different type of deals for different type of people. I have some people, it's like, I don't want dividends. I don't need any more cash. I want to park it.
Yeah,
And then in 5 years, when you sell it, I want to invest it again because I don't need it. And then I have some,
yeah, that's what we found also. People who are
yeah,
at different parts of their journey.
yeah,
Some people, investing from their IRA, they don't need it, so they rather compound the interest or, get cashed out at the end of the deal term.
mhm,
Some people they need cash. Maybe they sold their business and they're living off of the passive income. So you'll
yep,
find those people, and everyone's on a different point in their journey. So you're going to have a mixture of that when you're raising capital.
yeah.
Some people are strictly looking for equity, or some people looking for income.
So let's talk about what you're doing now. Ladies and gentlemen, it's Fuquan Bilal, and it is NNGCapitalFund.com. Check it out. You currently have a fund open. It's a opportunity fund. So talk a little bit about what a real estate opportunity fund is and what you're offering.
Yeah, so we have a mezz fund that's sort of like a lending fund, and then we also have a luxury spec home fund where we're buying homes here in northern Jersey, and basically investor have the opportunity to partner with us on that. It's a 2 year term. There's no distribution into the property, so it's 12% that they get for the 2 year term. The house is usually selling anywhere between 12 and 18 months, but the term is 2 years. And then we also have the mezz fund, which is a lending fund where we give investors opportunity to take a mezz position on an asset and to receive monthly payments. And that can range anywhere between 10 to 13%, depending on amount invested. So yeah, if anyone is interested, they can go to the website and schedule a discovery call. Usually I'll see what their goals are, and if there's some alignment, and explain to them what we're doing in the communities and the opportunities that we have as a capital partner, and then we move from there.
Accredited investors?
Yeah, accredited investors only currently.
Yep.
So we like all investors. Usually what we do is we like to educate those people who currently don't meet the criteria, but maybe they're on their way. So at
Yep.
least we're still educating them and letting them know what their options are. And eventually we've seen people reach that level.
Yeah.
Yeah.
Yeah. And it's very cool, when you say, hey, can I invest now, but I'm not quite an accredited investor. I'll be in a year. I said, well, but let's talk. And next year, there's always going to be an open fund. So, ladies and gentlemen, again, it's NNGCapitalFund.com. Any resources when people click on your website? How can they find out more about you? Or is there any educational materials?
Yes, we do have some podcasts and some of the blog content that we put out on the website as resources. We have some podcasts that we've done that
Mhm.
we update there. Um, we're actually in a probably in the next quarter we're planning on adding more value to the site with some updates. So, but right now those are the current resources. They can look at the content that we're putting out and also the podcast that's currently there.
And how can people get a hold of you outside of the website?
Yeah, so I'm all over social media at Fuquan Bilal, on Facebook, LinkedIn, they can reach me through there. Um, you know, they can actually schedule a call on the website and then schedule a time for us to connect there as well.
And Fuquan, is there anything that you'd like to tell our listeners that maybe I didn't hit on, questions that I didn't ask?
Uh,
Or was I
I was gonna
perfect
say
in
my
getting it
favorite
all?
ice cream. I was gonna say my favorite
Oh,
ice cream.
there you go. What is, I'll show you, I'll tell you mine.
Butter pecan, I think.
Oh, no,
I
that's
don't know.
mine.
It
You can't
changes every
take.
time I walk into the ice cream parlor. I know I'm not supposed to have ice cream.
Well, where's my wife's not here, so I sneak in some ice cream once in a while, but butter pecan I love, that's the one I grew up on.
Awesome.
And I'm a pie guy too. I can't have pie without ice cream. It's got to be a la mode.
That sounds like a sugar rush.
Once in a while, I sneak it in. Maybe on holidays. Fuquan, it's been a pleasure having you on the Richer Geek podcast. Ladies and gentlemen, Fuquan Bilal at NNGCapitalFund.com. Check it out if you want to possibly diversify your portfolio. Have a nice evening.
Thank you.